Hey traders, I hope you all enjoy weekend. Today, while the market is closed, we will discuss with you multiple financial instruments, and with just pure technical analysis, we will try to identify what can we expect next week and how technical analysis helps us to make these predictions. So I will analyze with you the euro-yen pair, dollar index, and crude oil. Yes, and for the private group members, I will talk about New Zealand dollar, pound dollar, and gold. So I hope that you will enjoy this video, and if you like it, please let me know, just text me and give me your comment. Yes, so let's start. First instrument for our analysis today is euro-yen pair. And here, the first thing that we need to do with you, as always, we need to grasp what is the current market trend. And here I purely analyze the daily time frame, and you can see that clearly the trend on euro-yen is bearish. We have the sequence of the new lower lows and lower highs. And from September, the market has started a correction. Though I was expecting a further movement upwards, market knows better, and you see a strong rejection from this resistance. And if we draw the horizontal line with you and check from which level the market has started falling, you can see that on the left we can see a very strong level of resistance, and it looks like it is a very solid argument for sellers to start selling from this level. Another thing that we can notice with you here is that the market was trading within the rising wedge pattern. Yes, and here currently, if we analyze with you the support of this wedge, the market is currently attempting to break it. Why I say that it's attempting to break it? Just because here with you we have a very strong horizontal structure support. And if I draw with you the line right here with you we have a very important key structure support for euro-yen pair. Just look at the structure on the left and see how many times in the recent past the market has respected this wide area. So according to my analysis, this is the kill zone, the decision zone for euro-yen pair. It looks like the consolidation on euro-yen ends and market returns to its bearish trend. To confirm our predictions, the market should cross the underlying zone, and if it goes below the zone, it will signify for us the continuation to lower levels of structure, the retest of the current lows and continuation to a new structure low. Yes, so it is like the recently on the euro dollar, the market was standing on a strong important structure and we didn't know exactly where it is going, but based on the analysis of the market in the past, based on the thesis that the trend is currently bearish, we can bet with you that with the very high probability the market will break below this structure and continue lower. So remember, next week for euro-yen will be very important because the market is trading within a key structure level, and the reaction on this level will determine the market future direction. Yes. So now let's analyze with you dollar index. So what technical analysis tells us about dollar index next week? What will be with dollar? And here the very important thing that we should notice with you on the daily is that here we had with you a falling trend line, right? And this trend line was respected 3 times in the past, and 3 times it's enough to consider this trend line to be valid. And what happened during the last week, the market has broke above the trend line and we saw bullish continuation. The breakout of the trend line was confirmed, and moreover, after the breakout, the market has went above a key structure resistance for dollar index. So what can we expect with you next week based on these observations? It looks like the bullish tendency will proceed, and we can expect with you further bullish reaction to high levels of structure. I think that next week the market will most likely go to this 98.2, bit lower, 98.1 level. Yes, just purely based on the structure on the left, and I think the dollar index will still keep growing in value. Yes, at least until this level. Then we will see the reaction on this level and it may retrace. But at the beginning of the week, currently it looks very, very, very bullish. So take it into consideration when you will place your trades on the dollar pairs and the instruments connected with the United States dollar. Yes. So now let's talk about the crude oil. Now about crude oil. And first thing, guys, you can't even imagine how many messages I received during the last and previous weeks after this selling rally started. So many traders were margin called, broke the bank just because of this strong selling rally. And for many traders, this was very, very surprising event, and they never thought that it could happen. But let's analyze with you the market from the historical perspective, and let's try to identify with you, was it movement very exceptional or it's just normal market condition? So let's just take with you the market high, the highest point after this rally from October 2019. Yes, so here is our market high. And look left. In April 2019, the market has reached this level. And look what happened with the market. The market dropped. The market significantly dropped from $65.5 per barrel to almost 50. Yes, nothing exceptional. The market has respected the level and dropped. Yes, and even if we look with you at rally in 2018 from 76 level to 42 level, nothing exceptional, just supply and demand issue. So there is no point for you guys to look for reasons like political events or something else. Here is just the supply and demand issue. The market reached a very, very, very important zone of supply, and you can see how many times in the past this level was important. And the market dropped. Yes, the fundamental thing about financial markets: the market respects support and resistance. It respects key levels of support and resistance. And here, what happened, right? So now, where the market is going? Where is the closest support? And it's always based on the historical perspective. I believe that the market can go even lower. So the continuation to 53 level is highly, highly possible. And this would be the level where we can protect our profits. If the market goes even lower, it may, I think, retest this wicks right here. Yes. And it will be the last resort for buyers. Breaking below this wicks, breaking below this 50.5 level, it can go even lower. Yes, so remember about that. Currently bias is bearish. Currently sentiment is bearish. So there is no need, there is very, very, very risky to buy oil from current prices just because it's very severely bearish. Yes, remember about that next week. And thank you so much for watching. Remember that if you want to have the extended version of the analysis, you can join my private group. And there each and every day. I give my views on different currency pairs, different financial instruments, and tell how can we trade it. Yes. Enjoy your weekend and thank you for watching.